Hi, everyone, and welcome to this morning's live stream. It's Monday, the 15th or the 14th. I think it's the 14th of July. It's Bastille Day. Up the revolution. We should see lots of nice festivities in France today. Um, it's a bit of a quiet day with regards to the market, but it's a very, very busy week. And often what happens is to the markets, it's, as I said, it can be a little bit quiet because all the fireworks are going to be later on in the week. We've got CPI, we've got PPI. Over the weekend, we had the sort of usual tariff news coming in. Futures opened gap down, but I believe they are recovering. That gap looks like it's going to be closed. But generally, the market condition today is sort of a little bit quiet, and we're going to look at some charts to see so that we can to show you how you can kind of pick up that kind of mood that we have at the moment. I mean, those of you who come regularly will know we talk about volatility. We have a specialist volatility indicator. We also have another indicator that can help us identify these sort of not doldrums exactly, but these congestion periods and these sort of range bound markets. As I said, that's the kind of market condition we are facing at the moment. And there's a fantastic example on cable this morning. So what I'm going to do is I'm going to share my screen straight away. If I bring it up here, where are we? It's down here somewhere. That's it. Share. Hopefully it will come up. There we are. Hopefully you can see that. David, can you see it okay? Just check with David. Yeah, can you see it okay? That's fantastic. Right. Um, this is my workspace for cable on TradingView. I have the daily, I have the hour, I've got the minute, and I've got the 2 minutes. Just before I actually go to cable and look at it in more detail, I'm just going to bring up the Dixie because a couple of sessions ago, I highlighted the importance of looking at the slower time frames to see if we can get an idea of where the price is likely to be going next. And I highlighted actually the monthly chart. This was last week, the beginning of this month, and I pointed out this 97 level. But what I also pointed out, for those of you who came along, was the volume price analysis element that was on this chart. In other words, we'd had, as you know, the dollar has had a big fall. We can see here big fall with the volatility trigger being activated. We've got a wick to the bottom of the candle, so obviously some buying came in as it hit this 97 level. Now, why did I point out the 97 and why did I say this was an important level and to be aware that possibly we could see a bounce in the US dollar? This is on the technical picture. There are other reasons as well, which I'll mention to you. And it's really VPA 101. You've got falling prices and you've got falling volume. So what can you expect? Well, you can certainly expect a pause, if not perhaps an outright reversal. But as always, when they fall so heavily, to reverse the momentum that has been in this fall takes time, and which is why markets always go move higher much more slowly than they do when they fall. But I think the importance of this level is we only have to go and look over here to the left hand side and we go back to where are we here, April 2022, and we can see we had a very similar situation in the sense when it got to this level, and it was the start of a very strong rally for the dollar. That is why this level is so key. Now, it's not exactly reverse strongly, but it's enough to at least tell us that this is what is likely to happen around this 97 level. Now, there are other reasons as well. The dollar is extremely oversold on the at the CFTC from the COT data. Everyone is very, very short. And when you have a market that is so heavily biased to one side, inevitably you almost get like a knee-jerk reaction. So that's the technical picture. There is a fundamental reason as well, i.e. from the COT data. The trouble with the COT data is when it's released on the Friday, like last Friday, it's actually based on what was happening last Tuesday. So when this data comes in on Friday, it's what the numbers are tomorrow. And it will be interesting to see at the end of this week if, in fact, some of those positions have been cut back and there has been a reversal, because it's quite extreme at the moment. So I said today is a quiet day in terms of fundamental news. And although there has been some movement, as there almost always is at the London Open, it's not been it's kind of fizzled out. And we're going to look at the 1 minute chart, we're going to look at the hourly chart, and we're also going to look at the daily chart for cable. And we have the sort of the reverse of obviously what we see on the Dixie, because these yellow lines are my daily levels that I've put in. I put these in manually. Then they're not derived from any indicator. I just eyeball it, and I sort of look at the last time, how many times a level has been touched, did it bounce off, and then I take the monthly chart, and because I color code them, monthly levels are in blue. And in fact, what we have here, we had a break higher and a break through this level, and we can see, nice rising prices, but the volume really doesn't correspond very much with the price action. So you get a mirror image of what's happening on the Dixie, and ironically, it also hits an important monthly level. And what do we have here? Well, we look like we have the beginning of what could be a 2-bar reversal for the British pound. So that is on the monthly. And returning to the daily, obviously we see that in more detail. That's when it got through, and the failure to actually hold that level. And we've got a nice little shooting star here, and we've got a pivot that's been triggered at the same time. Now, on a day like today, let me bring up the monthly chart, because the 1 minute chart, I do beg your pardon, because people often ask us about VPA. Well, does it work in all time frames? This is the VPA, which is really an explanation of the price cycle that the markets are fractal in nature. In other words, this type of price action, which just happens to be on the minute chart, if we didn't know what the time frame was, this could be anything. It could be an hour. It could be, and we didn't have the time down here. A chart is a chart is a chart, and you will see the price action cycle through the same cycle. So you will get a trend, you will get congestion, you will get a break higher, you will get a congestion, then you get a break lower, then you get a bounce higher, etc., etc. And this is what you will see all the time. Now, how do we know when we're coming into a congestion? How do we know when we're in a trend? Definitions of a trend, there are lots of them out there: higher highs, higher lows. You can use lines, you can use horizontal lines, you can use diagonal lines, you can use all sorts of methods. A congestion is first of all, traders are always very nervous about congestions. They really dislike them very much, because if you really get caught in a narrow congestion, you can very easily get cut to ribbons. Now, this is where this little yellow pivot can come in. So it's one of the earliest indicators that we developed. All the indicators, by the way, are available from quantumtrading.com. And what it does, it helps you mark the highs and the lows of a congestion. Then you can put your lines in. And if we look back, you've also got pivots in a previous congestion we have here. There's a nice little congestion there. And what happens is it'll start. You may also get a pivot in a pullback, but really what you want to see, we've got another little pullback here as it goes higher. You really want to start seeing them come into their own once the price moves sideways. And I just thought this was a really, really nice example of, first of all, the Wyckoff price cycle, trend, congestion, the breakout back into congestion and breakdown. As I said, you can join up the pivots yourselves. You can put your lines in if you want to give more structure to the chart. But there's also something else I want to say. This is the 1 minute chart. When we look at the hourly chart that we have here, again, I've got the pivots, but what I've also got here is I've got the Camarilla indicator, which we use for support and resistance. The third and the fourth levels are very important. It's where price is almost 100% likely to pause. Sometimes it reverses at these levels. But there's also two other levels which are important, and that's the R1 and the S1. It's called the buffer zone. It's called the neutral zone. Now, it doesn't mean that price doesn't move from the R1 to the S1 and back again, but it also tells us, certainly on the hourly chart, that at the moment this price it's the cable is range bound, and we can see here it's broken back up the S1, but we can see here in the last couple of hours, whilst there may have been potential trading opportunities within these hourly candles, this is 9 o'clock our time. That's the London Open. That's 8 o'clock. The usual sort of trap moves are in there. You can see here in the last couple of hours, the price has been confined to 134. What's the high? 134.89 and 134.72. So really not a huge range. And this candle that's forming at the moment is also really hasn't moved very far beyond that range. It kind of tells us nothing is happening very much in this pair. It doesn't mean that on the very fast time frames there aren't opportunities, but they are not going to take a whole bunch of pips. And if you are a very far, a trader that likes to trade on the seconds charts, and I'm talking 30 seconds, a 1 minute, a sub 1 minute, and David is one of those traders, and he can talk in more detail about that. And if you've got any questions, he's really the person to answer that question. So the hourly chart gives us the Camarilla levels, where the price action is at the moment, what we can expect on the faster time frames, and we can see the pivots being fired all over the place. And when you see something like this, you can then make a decision. You can say, I'm really going to stay out of this one. I'm going to find one where there's more of a discernible move, if you like, a stronger move, because at the moment it is just going up, down, up, down. If I'm on the 15-second and 30-second chart and I have an opportunity, well, that may be a different story. And if we go back and examine this again, where are we? 7 o'clock our time here in the UK is when the Europe opens. And we had a little bit of a move, and then we go into this congestion. We've got pivot to the top. We've got two pivots at the bottom. So that gives us our low of the session, if you like. It's a fairly, fairly easy to recognize that. We've got a little sort of hammer candle. We've got decent volume coming in, but then it just keeps going sideways, and it waits for the London session. We didn't have much of a reaction actually immediately at the London session. Huge amount of volume came in, totally out of whack with that. So that kind of is an anomaly, and we didn't really get the volatility coming in until about at 8:10, as we see here. And we've got this, David and I always call these classic trap moves at the open. Pivot was fired here. It also gives you the highs and the lows. So you could say, well, once it clears there, the volatility dies down. And we do get this little move here higher. What do we have here? It's a quarter past, 34.65. And where were we up here? Probably 65. It's about 10, 12 pips. I mean, it looks very impressive, but because we've looked at the hourly chart, and we can see the kind of range that we're in at the moment, it's really not that impressive as a move. But what is impressive about this chart is this beautiful, if you like, explanation, visual representation of what price action does according to the Wyckofian and VPA price cycle. So there we are at the moment, and let's see what happens. It's certainly not one that normally I'm a cable is one of my favorite pairs, but it's really got to do something a little bit special for me to want to do anything with it today. If we actually put also the Camarilla on here, because the levels that are on the hourly chart are going to be there all week. That's really, really important. Whereas the levels on this time frame, up to but not including the hour, they're refreshed every day. And what does that tell you? So looking at just the price action itself will tell us we are in a congestion. The pivots have defined those levels for us, but actually we are an even bigger congestion because we are also between the R1 and the S1 on the on this time frame, which tells us, which is a double confirmation that possibly this is not the pair to be trading at the moment.
Hi everyone, just switching screens. So I'm just going to, Anna's been on cable. I'm going to go to Aussie dollar. Just share that up. So you should be seeing that. There we go. Okay. Just on the first workspace, excuse me, just on the first workspace, I've got 30-second, 2-minute, 3-minute along the top, and on the bottom, I've got 5, 15, and out to the daily. And as I say, this is the Aussie dollar. Just going to expand these up to make them easier on the eye. There we go. Anna talked about these fast time frames and also congestion. And whilst this looks like a tradable trend, which it is for me as an intraday scalping trader, if you look at how far it has actually traveled, it looks very dramatic. But on this time frame, this is actually 10 pips, more or less, give or take a few. So the point is this, that for me as a scalping trader on a very fast time frame, that's a perfectly tradable trend. To someone who's on a 5-minute time frame, that's congestion. And that's what it comes down to, because you can disassemble congestion into trends and go all the way down to the fastest time frames that you care to have on your system. And on TradingView, you can go down to 1 second. I'm not suggesting you do, but if you go down to 15 second or 30 second, which is where I spend a lot of my life, then what is congestion to one trader is a trend to another, because congestion is made up of levels and it is made up of trends. And the fact that on a 30-second time frame, we are trading with a level up here and perhaps a level down here, within those two levels, we have trends. But for a slower term trader, it is purely congestion. It is no interest. And that goes to the core of why we use multiple time frames. Certainly one of the reasons we use multiple time frames, and also the importance of deciding what it is you're trying to do before you actually get into the market. Now, the other aspect of multiple time frames, again, which is self-evident, but I'll point it out anyway. If we go on the 5-minute here, pop that up full size. What have we got? Some very nice, very simple VPA 101 lessons here. We see the initial weakness come in here. It's confirmed here. We then go into congestion and we get a nice reversal trade. And all we've got to do is be patient through this phase of price action here. But we know what's going to happen, because in addition to those two signals, which are very strong, we've also got falling volume on the uptrend. So it's only a question of when, and a question of being patient and waiting for that to develop. We then get the move to the downside, and we're now seeing that rally develop to the upside. Now, what's interesting about the rally to the upside is when you look at that, you think, well, I don't quite know how that looks, because to me it doesn't look as clean as these simple signals here, and I would agree. But then if you go up to the 15-minute time frame, it's one of those. And this is the other reason that we use multiple time frames, because not only do the different time frames give us different views of the same price action, they also then assemble them or disassemble them, because we can go up the time frames in terms of slower ones, as we've done here. We've gone from 5 to 15 to give us a more meaningful insight into what's going on here. And we can see a little hammer candle, which is very nice. Thank you very much. But if we go down onto a 5 minute, that is not so clear. And the reason it's not so clear is because we have to group those three candles together. And doing that mentally is not so easy, even more so if you're doing 4, 5, and 6. If you're overlaying, let's take these two candles, for example, much more straightforward, we can pretty much see how that would shape up. It would shape up into something similar, maybe with some deeper wicks, but it would be a similar sort of candle that we would see on the 15 minute. If we go over to the 15 minute, it would be, in amongst this price area here. So the point is this, that we use multiple time frames for lots and lots of different reasons. And of course, finally, just to round off on multiple time frames and talk about levels for a moment, if we go down to the daily chart for Aussie dollar, what we're seeing at the moment is a very, very strong level develop in this region, in the 65, 89, 90 area, which has been now tested multiple time frames. And of course, if you had the accumulation distribution indicator on here, it would no doubt be flagging that for you and showing you how strong that was. But I don't want to touch on that indicator today, because I just want to go to another one before we wrap up. This is going to be a relatively short session. So there we are, some nice little VPA lessons, some insights perhaps into the whole business of timeframes and trends, defining what it is you're doing, defining how long you're going to stay in the trade, because if you're on a 30-second chart, you're not going to be in for hours. You're only going to be in for a handful of minutes. And that's defined by the fact that these trends are only going to last for relatively short periods. And therefore, that is matched to the length of time you're going to be in the trade. Now, just one final workspace. I just want to show you this indicator, which is the volume relative strength indicator. And the reason it's so powerful is because, as the name suggests, it looks at the nature of volume in terms of a relative nature. In other words, it is comparing volume bars for you. And it is associated very clearly and very cleanly with the VPA methodology itself. And by that I mean a lot of the terms and a lot of the analysis we do is very, very similar to VPA itself. For example, in VPA, in raw VPA, we look at, let's just pull one of these up. There we go. We look at the actual height of the volume bar itself. And what volume relative strength does is that it presents this in exactly the same way. What we are looking at in this downtrend is the increase here in terms of relative strength. And what relative strength displays is energy, momentum, if you like, strength of trend. Because if we want to grab a trend, we want to see some good strength developing in that trend. And that strength is portrayed very clearly by the height of these bars. So we know for a fact, as this trend gets underway, then as these bars increase in height, it's giving us a strong clue that that trend is strong, because it's got a lot of energy, it's got a lot of momentum. And this is exactly the same as we would expect to see in volume price analysis, raw volume price analysis. We would want to see in a downtrend, we would want to see rising volume in the same way, and also widening spreads, which is the other facet of any trend. In any trend, whether up or down, you want to see widening spreads and not narrowing spreads. So that's the first point about the volume relative strength indicator. It can be analyzed in exactly the same way. So we look at the height of the bars here and what they're telling us. In addition to that is color coded, as you can see. So when we're in a strong downtrend or a strong uptrend, we get a strong color. In this case, it's blue. And then as that momentum starts to dwindle and starts to dissipate, and we start to move into a bullish reversal, then two things happen. First of all, the height of those bars starts to diminish. And secondly, we see the color change. So it's a very, very visual indicator. I'll just pull this down a little bit to get those over there. There we go, like that. And in exactly the same way as in the uptrend here, we came out of congestion phase here. We're on 3-minute, remember. I'll just pull that down a bit. There we go. So we've got a congestion phase here. We've got a nice floor of support. We've got a nice ceiling of resistance here. And we start to come out into a bullish trend. We see momentum building here, starts to rise. A little bit of a fall there as the momentum here starts to stall a little bit. But what's interesting, it then starts to pick up as we start to develop again. So at no point did this go back down to zero and say, well, this is going to fall. It just, all that happened was that we had two things occur at the same time. We had a change in color. So we've gone from bright, full of energy, starting to weaken a little bit perhaps, but note how the volume bars, they're not falling away dramatically. They're not falling like here. They are just sliding lower, a little bit lower on each occasion. So what that's also telling us is that whilst sentiment has paused for a little bit, and you're obviously seeing that reflected in the congestion, in the spreads of the candles here, which have narrowed quite dramatically, which is not what you want to see for a strong uptrend. Fortunately, we get an injection here of good volume and we pick up energy again. But in addition to that, they fall. So we're seeing narrowing spreads and we're seeing these falling a little bit, but not fast. And then we see the pickup in energy again. And then at the top, where we would match this to our VPA analysis, where we would see volume coming in, volume weakness coming in. We've got wicks the upper body. This then falls away quite dramatically. We get a final little rally here where it tries to carry on higher, very weak, falls away very quickly, and then we move into our downtrend. It's a very visual indicator. It will help you enormously if you are learning volume price analysis from first principles. Fantastic. Do it on fast time frames because that will help you enormously. I wouldn't recommend going to 30 seconds, but certainly anything above 1 minute because the price action unfolds very quickly and you will be able to learn and apply what you've learned either through Anna's books, which are all up on Amazon. The primer is a complete guide to volume price analysis, which has been up since 2013. And I'm very proud to say that it is pretty much a Bible for many, many traders. If you check out Anna on X feed, you'll see thousands and thousands of comments from traders who've embraced it. And the beauty of it is this, that it doesn't require changes to what you're already doing. If you are a Fibonacci trader, if you're a any kind of pattern trader, whatever it may be, it doesn't matter because volume price analysis then provides the foundation. And this is what you read in the comments, that so many traders have struggled and they found that VPA is the missing piece of the puzzle. It is the foundational element that underpins everything, because what they've been trying to do is purely trade with indicators, which is very difficult. Try to trade a methodology which is pattern-based or whatever it is, level-based, whatever it may be. And it is volume that then provides the insights to what is truly going on behind the price action. There are many books up there, lots of examples books. There's one with 200 on stocks, there's one with 100 on Forex. So there's lots of opportunities to learn through the publications. And you'll also find all the indicators, this indicator over at quantumtrading.com. There are 2 education programs which take a deep dive. Once you've learned the basics of VPA, if you want to go into a deep dive, we've developed 2 education programs, the stock program and the Forex program, both, as you would appreciate, hugely based on volume price analysis as the foundation methodology and bringing in all the other elements so that you can trade those markets with confidence. And finally, we also offer the one-to-one coaching, and you can find those details over on Anna's site. So that's it from us today. Relatively short session. We will be back with more later on the week. So I hope you've enjoyed this one. I'll just stop sharing my screen. And if you have any questions, please drop us an email, anna@annacooling.com, and she will get back to you and answer any questions you may have. So thanks for coming along today.